Hello traders and welcome to another video review. Today is Wednesday, September 7th, 2022. Let's take a look what's going on the Forex market today. GDP data from Australia had beat the expectations for the second quarter, and the German GDP, as you can see, was released at 8 o'clock as well. Two most important events in the early trading hours. What else do we have today? We have a speech from the Bank of England Governor Bailey at 11 a.m. Please remember, just recently we have a new Prime Minister of Great Britain, so it might be related to this event as well. Ivey PMI from Canada, and the main event of today, Bank of Canada Interest Rate Decision. Both of these events are scheduled for release at 4 p.m. The Bank of Canada is expected to hike the interest rate from 2.50 to 3.25%. Quarter past 4, Bank of England MPC Treasury Committee will have a hearings, and that might be an interesting event. And of course, at 6 o'clock we got the EIA Short-Term Energy Outlook from the US. So plenty of very important events today from all over the world, so it might be a very interesting day, especially after the Bank of Canada interest rate decision. So let's find out what is going on with the Canadian dollar. Daily time frame chart of the Canadian dollar is showing the signs of strength. The recent bounce from the level of 1.2726 had broken above all of the important technical resistances, like this one, for example, 1.2964 and 1.2983. Now they will act as a technical support. Almost hit the swing high from the 14th of the July 2022 with the local high at 1.3207. Then we have a test of this level here, 1.3079. So now it's a verified technical support, and currently the market is trading very close to the recent swing high. So the situation here is very simple. In the case of a hike, we will have a break to the upside above the 1.3221, which is the high of the 14th of the July, and the market will rally higher. If there is no hike, or the market is surprised negatively, or like there is some kind of negative information spread across the web, then of course this support 1.3079 is then threatened, so it might be violated, and of course in that case lower levels are available. Please notice the fact that we are still trading above the 30-day moving average. The moving average is now at the level of 1.2947. Current price is over 200 pips away from this level. Market conditions are positive, sentiment is positive, momentum, the upside momentum is strong, 65 points. So the chances for another breakout, another higher high, are very high. So the odds for a breakout to the upside are rather high. So please keep an eye on the euro to the dollar to the Canadian dollar, and let's take a look at the euro to the Canadian dollar. Euro to the Canadian dollar. Not that often trading pair. In this market, as you can see, the situation is completely different. The euro is being sold all across the board here, and we have the local high, which is the swing high as well, in 2020, in the last day of the July 2020. Since then, lower highs are being made, lower lows are being made. It's been 2 years now, and we hit the level of 1.28, I guess. The low is 1.2885 from almost 1.5980 to almost 1.6. So it's obvious the trend is down, long-term trend. Let's see if those levels has been seen recently. There you go. This is the low from 2015, and this low had been recently violated. So that's basically, this is the low from 2015. Let's make it thick for everyone to see. This is 2015 low, and it's been violated. So right now the situation is very, very interesting for the bulls, basically, because the market cannot drop over and over and over again. It might bounce on or consolidate every now and then, but just recently we got this consolidation here around the level of 1.3298, 1.30. This is another technical support here, local technical support, 1.2978, and the low was made at 1.2879. so this is exactly that level here. So we got a bounce. The market ride for like 4 days. Then of course, what else could happen? Like bearish engulfing, big bearish engulfing pattern, confirmation, extension, and we are back towards the 7-year low at 1.3021. Basically, the key level that the market is right now fighting for is 1.30, the 7 years low on the euro to the Canadian dollar. Of course, if there is hike, then the market might extend the losses. If there is no hike, the market might continue the move to the upside above the level of 1.3298. So please keep an eye on the euro to the Canadian dollar. What's going on? Let's just switch to the British pound. What's going on the British pound on the 4-hour chart this time? So this 4-hour chart is showing us that we are approaching the level of 1.1410, which is a very important level because it's an important long-term technical support. Recently we got this bounce here, very nice bounce towards the 30 periods moving average, and then of course we lost all of the recent gains. Almost new local low was made, and we are getting closer and closer to the 1.1410. It looks like the bearish strength is very, very easy to like refuel. So every time the market jumps, it's being this pullback is being used to sell the British pound for a better price. So the bears are getting stronger and stronger. The momentum remains negative, remains weak. Every attempt to break above the level of 50 is of course capped by the supply, and the market goes lower. In order to change this situation, the bulls must break first above 1.1622, then 1.1717, 1.1760, and then above 1.1916. So this is over 500, almost 500 pips away from the current levels. The long-term trend is down, the mid-term trend is down, the short-term trend is down on the British pound to American dollar. Let's find out what is going on the S&P 500. We will switch to the daily time frame chart for the better point of view, and what we have here is a possible bounce from this short-term trend line. We just hit this trend line. We might bounce, we might break below it. It's really, really obvious right now that the current situation is in favor of bears. The momentum is negative, the momentum is weak. We are approaching the level of 30, so that level is of course the level that is indicating an extremely oversold market condition. So kind of a bounce is expected. However, please notice the fact that after this big candle here, every bullish attempt to rally had been capped, and there is no doubt that bears are in charge of this market. Big red candles here, including the yesterday's candle today. We barely moving, so we are waiting for the data, we are waiting for the New York session to start in order to see the situation for today. Nevertheless, it looks like the down move is being continued. This is very important trend line right now. This is very important zone, the supply zone, and the next target for bears after the short-term trend line is violated is located at 3,737 points. So that's the SP 500 outlook. And last but not least, of course, Bitcoin. What's going on the Bitcoin? We will switch to the 4-hour chart again, and finally what's happened? We have a breakout. We have a breakout from this consolidation here back to the downside, and we are testing the level of 18,640. However, the local low was made at 18,553. The market conditions on the 4-hour chart are extremely oversold. And this level, as you can see, is the technical support from the last day of the June 2022. There is one more technical support left for boost. Let's make it thicker for everyone to see. This is the swing low from the 18th of the June 2022, located at 17,600. It looks like with this rate of a descent, basically this level might be hit very soon, maybe even by the end of this trading week. Now there's supposed to be some sort of a consolidation or a bounce, and another wave of a weakness should come to the Bitcoin market soon. Please keep an eye on 17,600 because it's a very important level in the short term, in the midterm, and in the long term for every Bitcoin trader. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.